You're welcome back to the program. If you've just joined us, you're watching Business Incorporated. We're coming to you from Channels Television. Now, the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, says the key decisions taken by the regulator are part of the measures for achieving fiscal and financial stability in the country. At the end of its two-day meeting in Abuja, the Monetary Committee raised the MPR to 12%, up from 11%.
The committee urged the bank to continue to upscale its surveillance of the financial system with the aim of promptly detecting and managing vulnerabilities to ensure sustained stability. Finally, the committee remains committed to price stability across the range of consumer prices, exchange rate and interest rate, which is fundamental to reviving economic growth and employment generation. In the meantime, the bank would continue to leverage its development finance policy to support critical sectors of the Nigerian economy.
That's the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele. Now, what are the implications of these to the economy? I'm now then joined by the chief executive of the Financial Derivatives Company Limited, Mr. Bismarck Rwani, all the way from London. Thank you, Mr. Rwani, for joining me on the program.
Thank you, Balaji.
What is your reaction to the hike in the MPR?
Two things. One, on the exchange rate, we've seen an appreciation of the Naira from 325 in the parallel market to 322 this afternoon, but those are initial reactions. But in the interest rate markets, we've seen a tightness in liquidity and a spike in domestic interest rates. So basically what has happened is that there is a reduction in the amount of liquidity that is chasing the dollars that are available. So you have an option of either pursuing growth or pursuing inflation. What the central bank has done is to actually focus on inflation in the short run and allow growth to take care of itself. It is hoped that by tomorrow, when the budget is approved and spending commences from the fiscal side, we begin to see some growth drivers take off. But by and large, the initial reaction has been positive, but I suspect that the absence of an exchange rate policy will come back to haunt Nigeria in the next week or two.
Okay, I'll just mention one of the two things you just said about exchange rate reaction of volatility, but this has to do with the level of liquidity in the banking system. Now, from the decision of the committee, the banks have less funds or liquidity to work with. Of course, the committee raised the CRR by 250 basis points from 20% to 22.5%. Now, while retaining the liquidity ratio at the rate of 30%, what is the implication of this to the real sector and the economy in general?
That is what I mentioned. I said, by stifling liquidity, you've actually helped to strengthen the Naira, but at the same time, you have actually reduced the liquidity available in the system to actually grow the economy. So you made a choice of containing inflation over growth. Typically, because we have a stagflation situation where we have high inflation and low growth, you've got to work out a balance. So what I see happening is that the central bank is relying on fiscal authorities, i.e. the Ministry of Finance and Budget, to start the spending. On the other hand, they are using these measures to actually stabilize the Naira ahead of the huge release of money. Don't forget that we are going to release 380 billion Naira into the economy in the next week or two as capital expenditure for the budget. So these are the things that are going to be troubling to the economy in the short run. But in the end, what you're going to find is that the Naira is going to find its true value over the next 2 to 3 weeks. And mind you, the central bank did say that they are going to keep the foreign exchange policy under constant review and will not mind intervening in between meetings. So we don't have to wait till May this year to intervene to come up with an exchange rate policy.
All right, thank you so much, Mr. Bismarck Rwani, for your time.
Thank you.
Mr. Bismarck Rwani, the CEO of the Financial Derivatives Company Limited. Moving on now, Dubai is famous for its skyscrapers And more recently, it's Art Boom. The Dubai Art Fair attracts dealers, artists and collectors from emerging markets such as Africa. But given the world's current economic woes, how much art are Africans able to sell there these days?
The annual Art Dubai Fair recently opened in the Emirati city, showcasing works from across the Middle East, Africa and South Asia. Works by artists from more than 40 countries and 92 galleries around the world were on display at the fair, considered one of the biggest contemporary art events in the region. With only one sub-Saharan gallery among the 92 showing at Art Dubai, a great responsibility was placed on the sole African representative, the Nobuke Foundation from Ghana. Despite the lack of African galleries, modern African art was well represented with works by over 17 artists such as Uganda's Geoffrey Mukasa, Senegal's Solisisi, Abdali Glover from Ghana, and Abdoulaye Konate from Mali, among others.
The first time you are not labeled as African in the corner, because we came as Maka and they mix us all. You have to actually ask the gallery to be able to know where they are coming from. It's not like a place where they mark you that Africa and you go. It's very simple. If it were to be Western world by this time, I will have to go and make a line, and I have to prove how much I have in my account and all that to be able to come to this place.
While African art has attracted attention of museums and private collections in recent years, boosting prices, some worry that an economic slowdown might dampen sales as well as construction of galleries on the continent.
This year we are hopeful that bringing two Ghanaian artists, we can introduce them also to the region, also look at sales again, but a bit apprehensive because of all the world economic problems with the drop of the price of oil, a lot of developments in the Middle East which have been put on hold.
But despite caution on the part of the potential buyers, there's a lot to be said in favor of Art Dubai for those coming from Africa. Two main African artists who featured at this year's event are Daniel Kojo and George Efezi, whose works sell between $5,000 and $50,000.
And frontier markets have been faced with challenges of growing insecurity amidst various steps by the government to develop their economies. According to a report released by Exotic Partners, Nigeria is recording a positive revolution in governance through plugging economic leakages via structural reform of the NNPC, the Treasury and military. However, this is being offset by a fixed exchange rate policy, which is hurting macroeconomic growth and stability. Alan Cameron, the chief economist at Exotic Partners in London, joins me to discuss these issues in the report titled Frontier Markets Amidst the Rubbers, Some Germs. Thank you, Alan, for your time.
Thank you for having me.
Now, in your report, you stated the challenges and the possibility of improved growth in frontier markets. Tell us the essence of this report.
Yeah, well, I think it's just a broad look across frontier to try and say what we like about different markets and what we think is going well. Clearly, it's a very challenging global environment, and one of the big things that we've been trying to tell our clients and the message we've been trying to get out there is that it's very important to differentiate between the markets at this point, because some are well suited to the environment that we're in and others are less well suited. So that's what the report is about.
Now, the Central Bank of Nigeria, let's talk about our own economy. The MPC of the CBN raised its key index to 12%. How do you think global investors would receive or perceive this decision?
Well, I think it's quite difficult. For a lot of global people, Nigeria's fallen off the radar a little bit because the policies have been very unconventional and there's been major constraints to investing, the biggest of which has been the exchange rate. So I think in some sense it won't be front and center in the way that it once was. To those who are used to paying attention and who are following this closely, I think it will look like a little bit of a reversal of policy, but possibly in a good way, in the sense that it may signal a return to a more conventional kind of monetary policy, in that could be accompanied by further market-friendly reforms. And I think, that the market's clearly crying out for that. People would like to be more positive on Nigeria. I think they just need a little bit more movement from the regulators on key things like the exchange rate and interest rates.
Still on Nigeria, of course, government has taken steps to plug economic leakages while at the same time delaying further devaluation of the local currency, that is the naira. Now, if it succeeds this, do you think the government's efforts at addressing the structural deficiencies can make up for the delay or the refusal to devalue the currency?
That's a difficult question to answer. It comes down quite a bit to confidence, and it depends, how markets will react. But I think most people would agree that, a move in the exchange rate and a different kind of FX rate regime is necessary but not sufficient. But if you do look elsewhere at other things that the Buhari administration has done, a lot of it's quite positive. It's difficult to focus on that when there's this exchange rate issue that's very much in the foreground and is an impediment to investing. So I think once they get that out of the way, assuming that they do, then people will be able to focus on a whole range of other good things which have been happening. And that includes what you just mentioned, an MPC reform and public sector reform and security policy reform.
Okay, and in your report, you stated that Kenya and Morocco equity markets are regarded as low risk. But what is the significance of this preference? Okay, if you can hear me, Alan, I was asking you why...
Can you still hear me?
I can hear you now. Can you hear me? I was asking you about your reports, which actually pointed out that Kenya and Morocco equity markets are regarded as low-risk economies. Okay, we've lost touch with Alan there, but thank you so much for your contribution. We'll go on a break, and when we come back, we'll be talking to you about the FMDQ intraday analysis. We'll be right back.